Hello and welcome to our special show, State of the Economy, where we are going to discuss the GDP numbers for FY17, the year that just ended. Our special guests on this show, Sowmya Kanti Ghosh, the Chief Economic Advisor at State Bank of India, D.K. Joshi, the Chief Economist at CRISIL, and Sajid Chinoy, the Chief Economist at J.P. Morgan. They will help us analyze the numbers. Let me just tell you the broad numbers. The GDP for FY17 has been announced at 7.1% versus 8% GDP in FY16, the previous year. What's more important in the CSO's announcement is that the fourth quarter of the year just ended, the GVA, or the gross value add, has come in at a measly 5.6% or so. Therefore, the question, did the Indian economy slow down seriously in the second half of FY17, and is that because of demonetization? Now, the Chief Statistician of India, Professor T.C.A. Anant, doesn't agree with the demonetization argument. He says that this big fall in the fourth quarter is more because of the WPI, the Wholesale Price Index revision, which rose very sharply in the fourth quarter of FY17 and fell very sharply in the year ago, that is fourth quarter of FY16. Listening to the Chief Statistician, and we go to our guests.
The quarterly growth rate in any quarter, and particularly of the fourth quarter in recent time, I think it's important to keep in mind that, for example, the fourth quarter estimates in the current quarter are partly influenced by, in constant prices, by the growth of WPI, which has been seen. And if you look at the WPI series, which was released recently, the fourth quarter has seen a fairly sharp increase in WPI. This is in large measure due to the fact that commodity prices, which had been soft for most of 14-15 and 15-16, have now started hardening both domestically and internationally. This hardening of commodity prices have naturally shown up in WPI and therefore influence the GDP estimates at constant prices. Similarly, because of the relatively soft WPI numbers in the previous year, the fourth quarter estimates of GDP last year were much higher. If we keep these factors in mind, it provides a basis for keeping a sense of perspective on what the fourth quarter GDP numbers are revealing. The first quarter estimate has gone up significantly. The second and third quarter estimates are more or less at par. This is similar to the pattern which we are seeing in IIP, which shows that since the first quarter, that is from about the end of September, there has been a slight slowdown in the economy.
Well, there you are, Professor Anant, explaining that the fourth quarter GDP fell largely because WPI was sharply higher. And if you looked only at the basic prices, that is GDP at current prices, then the fourth quarter of the just concluded year is actually 11.3% compared to about 10% in the previous fourth quarter. So is there a genuine slowdown, Sowmya? After all, we have construction coming in at minus 3.7 real GVA and financial services coming in at just 2.2% growth. So is there a real slowdown, or is it only because of the price impact that the GVA for the fourth quarter looks very low?
See, I will come to that price impact later, but let me just give you some numbers which will put the things in proper perspective. If you remember, in February, when the CSO had announced the data, the full year GDP growth rate was given at 7.1%, and the GVA growth rate at that point of time, I suppose, was at 6.7%. Now the revised data showed GVA growth at 6.6% with a GDP growth unchanged at 7.1%. But the interesting thing is that the Q4 GVA growth rate, which could have given a growth rate of 6.7%, is now stands revised to 5.6%. So that has been a 90 basis point downward revision. And if I just go back into the quarters Q1, Q2 and Q3, in Q1 there is a 70 basis point upward revision in GVA, in Q2 10 basis points and in Q3 10 basis points. So this 90 basis point downward revision has been exactly allocated in the Q1, Q2, Q3 numbers. So we are getting a GDP number which is exactly the same as it was last time. Now, So this is basically the model of the number GDP and the GVA which has come about.
Okay,
now,
Sowmya, let me therefore interrupt.
Little deeper into the data. For example, if I look at...
Okay, now let me just interrupt. This is exactly what TCA Anant is also saying, that actually you have to distribute, if you looked at all the 4 quarters, then you will get a better idea. But does not that also mean that there was a seminal slowdown even before demonetization, and that only got worse in the second half?
Yes, exactly. I'm coming to that number now. So if you now look into the numbers of the manufacturing growth rate, which was revised 10.7% in Q1, is actually 5.3% in Q4. So the growth rate has more than halved. And similarly, construction sector growth rate has actually turned from 3% to minus 3.7%. The significant drop has come in the finance sector, which has declined from 9.4% to 2.2%. So there has been a perceptible drop across all sectors, specifically the service sector, the construction sector, and the manufacturing sector. And the other thing is that you are getting an overall annual growth rate, the Q4 GVA number is 5.6%. If you strip out the public administration services, the growth rate is actually coming at 4%. And if you strip out agriculture, the growth rate is coming at 3.8%. So therefore, the entire growth in the last quarter has been driven by the public administration sector and defense sector. And that is also visible if you look into the annual data. Annual data shows an GVA of 6.6%, which is actually 6% if you strip out the public administration number.
Fair point.
So my sense is that there has been a continuous slowdown, which has become more perceptible in Q4. And if you compare the second half number with the first half number, the possibility of a slowdown actually looks very evident across all the sectors, specifically manufacturing. And finance, insurance and real estate sector.
Fair point. Let me toss the same question to Sajid. Sajid, be that as it may, that there has been a slowdown, in the construction sector, as Sowmya points out. In the first quarter, it was plus 3.1%. In the last quarter, it is minus 3.7%. Likewise, in finance, 9.4% first quarter, last quarter, 2.2%. But that said, is there not an interplay of cement prices over here? Prices crashed in the fourth quarter, and that is why the real GVA looks bad. But if you looked at the constant prices, then the difference in construction is not that big.
Latha, a couple of things. You're right that in any one quarter the deflator may move, but otherwise, we should really be focused on real GDP, not on nominal GDP, because whatever happens to prices and to whatever extent the WPI has moved, the idea is you've deflated that effect out and you're left with some real value add. Now, two things. I think both elements of what Dr. Anant is saying are true. That the last quarter may be artificially depressed a little bit because of the base effect, also because we're still recovering post-demonetization. Maybe there'll be some recovery in the next quarter. But it is undeniable that the private sector has been slowing, not for 1 or 2 quarters, for 6 or 7 quarters. The best way to understand this is to look at GVA and strip out both agriculture and government spending. And the trajectory you get is actually very sobering. In the previous year, GVA ex agri ex government spending was 9.8% in 15-16. In the first half of 16-17, that slowed to 7.6%. So the slowdown had begun even before demonetization. In the second half of 16-17, it's down to 4.9%. Now, this is sobering, but it actually lines up very well with all the other high-frequency indicators. Just look at the new IIP series, which I think is a very good one. There are no price effects over there. Right? Those are volume indices. And what you're seeing in the last 9 months is a slowdown. So if I look at IIP, PMI, credit growth, core inflation, you now have a consistent macroeconomic narrative that growth had begun to slow 2 quarters before demonetization. It has slowed in the second half perceptibly more, despite these base effects. But one final point I'll make, it's not fair to blame all of the slowdown on demonetization, because there was a secular slowing even before that. So we don't know how much growth would have slowed absent demonetization, right? But let's accept the fact that we're in the middle of a sustained slowing here.
Okay. Well, let me get to DK Joshi. Mr. Joshi, several seminal points have been made in terms of construction, manufacturing, and the fact that stripped of agriculture and government expenditure, you get a very poor growth. What's your sense? Should we go with that? Or do you think that, the price play is important and the base effect, fourth quarter last FY16, showed a very high growth, and therefore this is more a statistical mirage?
I think the economy did slow down, and I think particularly the construction sector was expected to be hit by demonetisation, and that's showing up. And I think if you look at the other side, which is, I think we've been discussing the gross value added from the supply side, but if you look at the demand side, I think the picture becomes a little more clearer. The investment have been hit. I think the investment growth was negative, and the private consumption is still holding up, but weaker than earlier. What's actually driving is the government consumption, which has grown at a phenomenal rate. So I think clearly in the second half of 2016-17, the growth is supported by exogenous factor of agriculture and also exogenous factor of government consumption. So I think otherwise there seems to be a slowdown, which is very evident from the data.
Okay, but Mr. Joshi, where is this government expenditure coming from? I mean, if you looked at the state budgets, and there is an analysis from Credit Suisse that has just been put out, that actually analyzes some 87% of the state budgets. About 17 major states have been analysed. That shows that state expenditure actually fell in the last year. Where is this expenditure? Should not that expenditure also be real? I mean, it should contribute to the economy. There's nothing wrong if it is the government that is spending, provided it brings growth. Do you see it in any sector?
It is government, not investment.
Or is it all seventh pay commission kind of, impact?
I mean, it's the pay commission impact, I think, to a great extent. Otherwise, I think, or maybe they have spent a little more on the consumption side. I think, which was visible to some extent in the government budget, but as you said, the state budgets are not reflecting that increase. So I think clearly, we don't know the details of the breakup of government consumption expenditure, to what extent it's led by the sector and what led by the state. So what you just mentioned, I think, looks like it's the central government that is firing this overall increase in government consumption expenditure.
Okay. Well, there is another number that I wanted to get your comment. This time, let me get to Sajid. Sajid, if you looked at private final consumption expenditure as well, I mean, what is the lesson you are getting? Are you getting a sense of growth at all? That seemed to have grown reasonably well at about 6.7% or thereabouts.
Yeah, Latha, a couple of things. First is, I disagree on the part about states. If you look at state budgets closely in 2016-17 and look at expenditure, our estimates, it's gone up from 16.8% to 18.5%. So there was a big increase in expenditure of the states. Also remember, the central government got more tax revenues, and therefore it didn't have to do the typical contraction in expenditure in the fourth quarter. Both these factors have contributed. I'm going to reserve judgment on the expenditure side. I think the quarterly data on expenditures it still needs to be worked on. I'm much more comfortable with annual data. But I think that the larger issue here again is there was some slowdown in consumption. But for me, that's not the worrisome part. The worrisome part is what's happening on the investment front, and we're not seeing any green shoots out there.
Okay.
So I would worry less about consumption because I think that's temporary. It's the inactivity of investment that worries me a little bit more.
Okay. Well, that point is taken. Also, Sowmya, would you agree that government numbers are so exaggerated largely because of seventh pay commission? Or would there have been some genuine investments in roadways or railways?
I would tend to, I think, a couple of points on the government expenditure side. No, I agree with Sajid that there has been a jump up in expenditure before. If you look into the recently published RBI report, also will find that there has been a significant increase in the expenditure on the part of the states. Having said that, I am not sure whether there has been any significant investment on the infrastructure sectors, because last year, if I remember, the capex in the second half was actually down compared to the first half. So I think it's maybe more of an impact of the pay commission which is playing up in the numbers.
Okay. Well, fair point. Gentlemen, I have to take a break, but I'm coming back with the more important question. How will this GVA and GDP number change the perception of the Reserve Bank? Will the Reserve Bank also read this as a serious fall in growth, and with inflation down, will it change its stance? That question after the break.
30 days to go for India's indirect tax landscape to change forever. The big question, is India Inc. ready? The government, by the way, says it totally is. CNBC TV 18, in association with BMR Advisors, has conducted an exhaustive poll among top honchos of India Inc. to assess their preparedness. So, here's who we polled: CEOs, managing directors, presidents and chairmen, and CFOs as well from across 17 sectors. They were polled online, and the poll, of course, was anonymous in nature. Now let's come to the key findings. As things stand today, only about 19% of India Inc. say that they are more than 80% ready for a July 1st rollout. A majority of over 45% say that they are between 50 to 80% ready for the GST introduction in a month's time. Now, there are many more interesting findings. For starters, majority of India Inc. actually wants the GST to be deferred by a couple of months. But at the same time, a majority also believes that the July 1st rollout is a realistic timeline. The government's preparedness, of course, as I pointed out at the start of the show, pushing industry to follow suit. We will, of course, reveal all the details of our survey at 6 p.m. tomorrow night as we count down to the landmark tax reform. And do remember, CNBC TV 18 is your GST destination.